Okay, you guys, so let's talk about the Lyft trade that I shared with you guys. So if you are in my school community, then you will have seen that I put in my Lyft swing trade plan. Okay, so I did close out some trade, some runners, well, close out part of my trade today. I had 10 contracts, I sold off five, and I have five runners still going. Now, if you miss what took place with Lyft on today, okay, so we did come back down. It's a pullback. I'm waiting for us to get back under. If we hold above 17, then we may be holding that area for a good little bit. But if we break below it, it will definitely get back to those levels that I mentioned in my trade plan. Okay, so I'm going to go to my trade plan that I put in my school community. Okay, this is what I said. It's pretty long, but I want to read the part where I said my call entry or my ideal entry. Okay, on a pullback towards 1650 to 1680, that support range, or a breakout above 1724 to 1730 with volume. Then I said, or a entry just above 1740, 1719 to ride a breakout, slightly more risky, but watching for confirmation with my target of 1820 to exit that play or to exit some of my contracts and then of course leave some running. Well, I got in at those levels that I mentioned, and let's see here. We went up on Lyft. The high on that one was $19.35. I got out at $19 even on that, and I left those five runners. Now, as of today, we did pull back and we closed out at 1833. Okay, so when you are, even when I release these plays, okay, or I'm releasing these trade plans, I always give ranges. Sometimes I'll give exact amounts that I'm looking for my little entries and my targets, but a lot of times I move it a little bit just to kind of be sure that these we aren't anticipating like exact levels, because sometimes it may hit those levels, it may break it, and it may just be a few cents off. So it's best to kind of watch those ranges. So I'm personally waiting on a slightly bigger pullback so that I can get into another call to ride it back up again. Okay, but that trade played out very nicely. So if you saw it and if you were able to take advantage of that play, kudos to you. Okay, so I'm still looking for us to kind of come back to that $16 range again. Um, it's definitely not off the table, but if it broke above that $17 level and it held there, then I was definitely expecting it to be able to push up some more. Now, they will be having earnings, but we still have some time for that, which is way in November, which is November 5th on a Wednesday. Now, one of the things that I'm looking at with Lyft is I'm definitely looking at 25 to 30 by year end with Lyft. So this isn't just one of those ones that I'm looking to trade, but also invest in, hold, and let this thing ride up. Okay, so I have that $25, $30, $35 price target as the year, kind of ends out, and then going into 2026. So if you are going to get this one can definitely be a low risk play. But if you saw the trade plan, you saw that I had 4 to 6 weeks on the expiration. We need some time on our side. We need that theta as low as possible, and we have to give it time to play out. Because like any long-term trade, we can expect pullbacks, we can expect drawdowns to take place, but we have to be able to hold firm. So if we have time on our side, we got time to let it run back up, even if we see it down. Now, another thing that I mentioned in that in that trade plan was about averaging down. So even though we might get a pullback and I get into the place where I said that this is my ideal entry, it may come down some more, but this is not the time to sell off, especially if I know where the play is going. I will average down by simply buying more contracts and then just averaging down my initial cost and letting it go back up to my initial targets. Okay. And Lyft is one of those plays. So 4 to 6 weeks minimum. You can do as long as you want, but 4 to 6 weeks minimum to give it time to ride out, hit your targets, leave runners if you want, or exit the entire thing. Okay. So that right there was definitely a play that I wanted you guys to keep on your radar, especially with earnings coming up in November. That is going to be here in no time. I believe that as long as we can hold above this $17 range, we can continue to push back up. But even if it breaks below 17, in my opinion, it's just getting back to a heavy level where the bulls will be waiting to get in, do their rinse and repeat, and then we're going to rally this thing back up. Okay, so just wanted to put that one on your radar. I do also want you guys to watch Intel. Okay, I also posted a Intel. Let's go to Intel. I also posted a trade plan for them as well. If you go to Intel's daily time frame, they are currently working with a bull pennant. Okay, and if you don't know what a bull pennant is, it is just a bullish signal that we can probably anticipate more upside. If you have not heard, also Donald Trump had a meeting with Intel's CEO, and he left the White House with the United States now owning a piece of Intel. And that right there could potentially cause the stock to progress a little bit, depending on more information that's kind of surrounding this whole Intel now having given ownership to the United States government. And the whole thing that kind of started with that was Trump was calling for the CEO's resignation. The CEO went and met with Trump, but he was calling for it because of his China ties. But he leaves the White House and he leaves some ownership for the United States of America. So hey, keep that news and the whatever happens with that on your radar, okay? But overall, it definitely can expect more upside. Me personally, I have a target up there at about 27.59, but you can go and see my full trade plan in my school community where it's absolutely free, by the way. I'll post somewhere, wherever I post this video, link down in the description where you'll be able to see my trade plans, okay? But right now, on that day, looking at that bull pennant, I am anticipating some upside on this play. I have not made my move or my entry yet. I was waiting for that 24, even to $24.04 level to kind of hit as my ideal entry to ride it back up, okay? So keep that one on your radar. These are some low risk plays depending on how many contracts you get and how far out you go. Remember, the further you go on your expiration, the higher that premium will be. And of course, the more contracts that you get. Okay, but you definitely can enter this play with less than $150. But if you try to do like a week on the expiration, then of course you can probably get in for less than 150. But I highly recommend going further out on your expiration because this is another one that needs time to progress. It needs time to play out. So if it pulls back, your theta isn't eating away at your profits, it isn't eating away at your premium, and you still have time to kind of let it go. Just in case we see some pullback happening, you could just average down instead of just all, outright calling your play. Okay, so keep Lyft on your radar and keep INTC, which are two low risk plays that you can definitely check out and ones that are currently on my radar to swing. With that, I will see you guys in the next video.